This is the Absolute Business Mindset podcast, created and hosted by Mark Hayward. I'm a corporate employee with an entrepreneurial mindset. This podcast will help and support you with new ideas about business. These are my thoughts, ideas, and comments. Today, I'm talking to Jennifer Peake about her career in the finance industry, all the way from an auditor through to her current business, which is the Peake Advisory Group. Hello, Jennifer. How are you?
I'm well. How are you?
Very well, thank you. How are you coping in this new normal of COVID-19?
This new normal, yeah. So far, so good. It's starting to be springtime here.
Right.
So I'm in the middle of the United States, and that does wonders for you.
Yeah.
Just to be able to get outside.
Yeah. So in London, so I'm based in London, and we are pretty much quarantined into our houses. I've found having a garden has been exceptionally useful, especially for me and the kids. But yeah, we're all just trying to work out when we go back to, well, I'm still working as well, but when we go back to the office, when we go back to as I said, the new normal, I think things are actually going to change in business as well. So, but you predominantly work from home, or
I do. So I haven't been as impacted by the change in location as I think a lot of folks who typically go to the office every day have been. I do have an office space, but it's a very small one. So it hasn't really been that disruptive for me, right. In terms of that.
And your business, has it been affected by transactions or business on your?
It has shifted. That is probably the best way to put it. A lot of our work had been focused on a certain type of activity, and with the economic changes and it's almost like a pause is probably the best way that I would describe it. Yeah. We've really refocused a couple of things on, for none of my clients, well, only one of my clients actually had to close.
Okay.
All of the rest of my clients were considered essential businesses. And so they've continued, but they've had to adjust a little bit.
Yeah.
So, in a lot of cases, we moved from a growth strategy to a how do we pause and pick that back up strategy.
Yeah.
So it's been very interesting.
Right. Yeah. No, interesting times. I genuinely don't like interesting times. I like it when it's nice and quiet and everything's ticking over. But anyway.
Yeah, I'll tell you what. I think a lot of us would right now say there is something to be said for the status quo.
Yeah. Absolutely. All right. So let's, as I do with all my podcasts, let's go back to your origin story, which is a finance and accounting at Central Missouri University. So tell me a little bit about that.
Sure. So I went straight to university when I graduated from high school, and originally was going to major in English and become a lawyer.
Right.
And my daughter to this day is really unhappy that I didn't do that, because I guess she thinks it would be cooler if I were a lawyer. But switched that to finance. Got about halfway through my college career and decided that I really wanted to be eventually a CFO.
Right.
And so back at that point, the pathway to becoming a CFO really involved going through the public accounting side and getting your CPA license and doing all of those things. So I added accounting to that degree. Graduated from there and went straight into public accounting as an auditor.
Right. So yeah. So why did you change into accounting? Did you think it was like a good long-term career path for you? You said you wanted to be a CFO. Was it the trajectory that you wanted in your career, and you felt finance was the best place for it?
Yeah, with all of the intelligence that a 20-year-old can possibly have about where their career is going to go, that's exactly what I thought. I mean, what I did was, because of a lot of the classes that I was in, we had to subscribe to the Wall Street Journal.
Mm.
I looked at the want ads,
Yeah.
right? The employment ads, and looked at what the requirements were for the eventual career that I wanted to have. And there was a lot of requirements for that public accounting background, for that CPA license, you know, those different sorts of.
What is CPA? Is that auditing in the US?
In the US, it's a certified public accountant.
Okay.
So for a lot of folks that do taxes have a CPA license. Yeah. You could also you don't have to be an auditor to have gotten your CPA license.
Okay. So why did you choose auditing? I've got friends of mine some friends that were auditors, and they did their 3-year training and then immediately went out and found something different. Mm-hmm. And then I've had friends that have just really enjoyed the atmosphere, going to the client's premises and doing the auditing, and found it really rewarding. Which side did you sit on?
I sat firmly in the middle of those two things. I spent 5 years in public accounting, and spent the whole entire time on the audit side. That was just where I entered the firm at, and I really enjoyed that. I never felt the pull to the tax side. There were certainly people that did, and they were much better at that. I'm glad I didn't end up on the tax side. I left public accounting at the point where, so I entered public accounting in the early 90s. And in the United States, there started to be a shift in public accounting where, as you moved your way up the food chain inside the company, you were really responsible for going and getting your own clients. Okay. And around that 4 to 6 or 5 to 7 year mark, that was when you started to get into that manager role and that partner track. I didn't see myself being a partner in a public accounting firm. And in the United States, there's also this, or at least there was when I was in it, that's about the time that you're at your maximum market value if you want to make the transition to a private company. Right. So it was a combination of those types of things. I enjoyed immensely going out and working with a variety of different companies. I did have engagements that I worked on each year, so there was some consistency there as well. Yeah. It was great. Our firm was a smaller regional firm, so I got to work with small to mid-sized companies during that part of my career, and I really enjoyed that quite a lot.
So you said that you've been in the finance industry for 25 years. I saw 25 years since the 90s. How has it changed in those 25 years?
Oh, goodness. Well, I will say this, and I think a lot of people can say this about their industries. It's faster. You know, there's just the rate of change in business and in the financial elements of business is just, the pace keeps increasing. I think you see a lot of alternative structures and competition. Yeah. And so that also puts pressure on companies. Yeah. There's
disruptors in your industry as well.
Yep.
So like for the UK, we've had online banks, things like in the UK is Starling and Monzo, which have really changed the way banking is for a lot of people, and a lot of it's now done on an app, which has made the banking industry in the UK go everything to an app. So do you think those sorts of disruptors have enhanced the industry, or have they sort of just changed the industry?
I think I definitely think there's an improvement. My philosophy in general is that the enhancements and the changes that come from those elements and the introduction of them, even if it's not from a specific app, is good for everybody. I mean, it forces existing companies to think differently, to at least evaluate. I think one of the big things, and this is part of what I think you're saying, is, it used to be 20 years ago where your competition for any particular company was really driven by a couple of different things. One was geography, right? So it was much more, local or regional or national, and you knew what playing field you were on. And then secondly, the size of company that you were helped define who you competed against.
Yes.
But now the smallest company, because of the disruption and the innovation, can compete against the largest one.
Yeah.
And I think there are, a lot of benefits. They probably don't see it that way, but a lot of benefits to larger companies by having these smaller disruptors. And not to move too far forward in our conversation, but some of those larger companies have used those smaller companies through acquisition as a way to improve their own innovation. Right? Instead of trying to build that inside their bureaucracy, they let that happen outside of their company, and then they can decide to acquire it if they want to do that.
So for these sorts of large corporates in the finance industry, do you think they can actually be entrepreneurial themselves? So like an entrepreneur, do you think that is easy, hard? Because I've got a particular view that, so I work in technology in a big four, and I've found that from a technology point of view, you can set up, they call them labs, where they can develop a technology very fast and then put it back to the business. Do you think large companies in the finance industry can move as fast in that sort of setting? Or do you still think it's like changing the direction of a company is very slow and gradual, and it takes a long time for a large company?
Purely from the financial elements, I think it takes longer. And there's a couple of reasons for that. Certainly one of them is regulation.
Yeah.
And, there's just inherent limitations to what you're going to be able to do and how fast you're going to be able to do it, because there's a fair amount of overhead and requirements as it is related to that. The second thing I think is that when you're talking about financial elements, it's more of an esoteric exercise than it is building a new application or something that can be held in your hands. And that requires a different way of thinking. And if you're inside a large company, unless, like you're saying, you have this kind of lab environment, regardless of what problem they may be trying to solve, unless you have that sort of lab environment with the open-ended, go be entrepreneurial and innovative, I think it's hard to get that inside a company if you're just in a regular department.
So do you think, so interesting point you made about regulation. So obviously the financial industry has been more regulated over the years. 2008 changed the way for the finance industry considerably. How do you view regulation? Do you see it as a positive way of being able to put a check in a business, or do you find that it inhibits businesses to be entrepreneurial, or make changes?
I much more an inhibitor than I think the intended protection. I think a lot of regulation starts out with a really good idea and ends up in a bureaucratic checklist. I'll use it completely, it's not completely non-financial, but in the United States, one of the regulatory reactions that happen in the early 2000s, when we had some of the things like Enron happen,
Yeah.
was something called Sarbanes-Oxley.
Yeah.
And, a lot of times what you see is this giant pendulum swing, right? We were to the far something, far right or far left, and then there's a regulatory overreaction, and the belief that the regulatory environment can stop some of that behavior. And as a result, you see a lot of checks and balances get put in place that really just create a bunch of overhead for whomever they're applying to. I worked in a public corporation when that was enacted, and my personal viewpoint of it was, okay, nobody should feel better because we're complying with Sarbanes-Oxley. We're complying with it. We're all now doing what we're supposed to do, but this shouldn't make you feel better about the financial results. It kept us busy for a couple of years trying to do the compliance. And the challenge is that's exactly what it is. It's just compliance. You're not getting a better product. You're not getting a better result, but we all feel better because we got the checklist done.
Yeah. And that's an interesting, so Sarbanes-Oxley was impacting when I first joined a Big Four, and I totally empathize with it was an overreaction, which then, as you said, for 2, 3, 4 years, we were just understanding what it meant and the ramifications of what it was. And as you say, you're just scrabbling around to make yourself compliant. So yeah, I get that. And I think when things are very good, and unfortunately this is the finance industry, it does happen in other industries, but when things are good, people start taking risks that probably you shouldn't take, let's say. I'm non-judgmental as much as I can be, but and what you find when there's a contraction or there's a change, people do move to, let's regulate, let's stop people from doing X, but it's never stopped any accountancy firm finding the next loophole.
That's right.
Because there's always a loophole that you find after some regulation's been made in. So I find it a slightly, I think government, you hit the nail on the head for me. You said they start with the right intentions, but they end up getting you to do a checklist, and then the clever guys in your business are just trying to find the next loophole to move on to. So just on the auditing, so from an auditing perspective, how do you think that impacted your peak advisory group? We're going to go into it a little bit more detail about your transaction size, but do you think that impacted the business that you created?
Yeah, it definitely did. And, I came out of public accounting and I went into a large company and in the accounting and finance element. And so then I was on the other side of the table from the auditors. So I got to continue working with auditors for all of those years. There's a couple of ways that has impacted the firm that I founded. One of the services that we provide is due diligence services, and that is a little bit like auditing. And it definitely comes into play there, but it also helps me understand any accountant's reports that I read. Right, so I know the context in which those have been prepared. I understand what they've looked at. I understand what they haven't looked at, and really can utilize those in the other work that we do, so that we have some assurance about what's already been reviewed, and then we know where to focus our value-added efforts. So that helps really quite a lot from that perspective. The other thing from a mergers and acquisitions standpoint that we look at is related to business value and what some of the risks are in the control structure. So, from an auditing perspective, one of the first things that you do is you assess the control structure or lack thereof, and that helps you understand what the other risks are in the operations or in the financial results, and we can bring those elements into our valuation process in terms of company-specific risk factors and variability analysis and the other components of valuation.
So from a transaction acquisition point of view, which side do you sit, or do you sit on both sides? Do you sit on the seller side? Do you sit on the purchasing side, or do you do both?
We do both. Not for the same transaction, but we do both.
Of course. Right. Okay. And what would you say? So if we take an acquisition that do you deal just with SMEs now, or do you deal with Fortune 500?
We deal well almost exclusively with SMBs.
Okay, so so from an acquisition point of view, so you're going to do your due diligence on who you're going to purchase, who they're going to buy, but try and break it down for me, because I find it interesting to think of, is there a sort of, I'm going to say checklist, which is probably the wrong way to describe it. Is there a sort of process for actually acquiring a company, and what you look for, what you report on, what your due diligence says? Just talk a little bit more about the sort of acquisition process.
Sure. So, there's a fair amount of times that we get involved in the acquisition process when somebody has already identified their target company, and in I would say at least 50% of the cases have a letter of intent. Because that's when they want to engage us. Now, the other 50% of the time, we're involved with somebody who's looking to purchase a company, and they want to understand what they should be looking for. We help them sort of evaluate what kind of the purchase price should be, and help them come up with that so that they can structure their offer. And what we're looking for, a couple of things. Financially, we're looking for sustained execution at the revenue level, at the profit level. We're looking for seasonality or a lack of seasonality. And most businesses have some sort of seasonality to them. And particularly, we work a lot with businesses that have some sort of construction flavor to them.
Okay.
So, it just depends on what type of construction company it is, whether it's better in the summer or not, as the case may be. And then, and the biggest reason on the buy side that seasonality is important is because of cash flow. So the vast majority of our buyers, and I can think of maybe 5% exception to this. So when I say vast majority, I mean that, are financing the transaction. So they're going to have debt service on the company that they're buying. And probably 75% of the time, that company doesn't have debt service on it currently, right? It's a founder company. They've had it for 25 years. They don't have any debt. And so on the other side of the transaction, that company is now going to have to be funding a debt payment that it wasn't funding before. So that seasonality in terms of cash flow, if you don't have debt that you have to cover, doesn't necessarily matter as much. Whereas if you now have this debt payment on your couple of $1 million worth of debt related to your acquisition, you need to be assured that you're going to be able to cover that. And not only do you as the new owner want to know that, your bank wants to know that too, right? That's going to be part of the process to get it approved. The other reason, and this is related to that seasonality is important, is because of working capital requirements. So depending upon when your transaction may close, the new owner is going to have to figure out how to get that initial working capital into the business. And it can come from the old owner, it could come from the new owner's personal equity contribution, it could come from part of the acquisition loan. But that's one of those key areas where a lot of new owners don't really, it's often overlooked. That's probably the best way for me to say it. It's something that's often overlooked. They think they just need to get the money to buy the company, and that somehow it'll magically be there for them to make their rent payment the first month.
So the company that you're acquiring needs to have the cash flow to be able to service the loan or the debt that you've come across to be able to purchase the company.
That's correct.
And you said sometimes that isn't the case, or the buyer doesn't really take that into consideration enough. I assume that's part of your service, that you're educating.
Yeah, it is. It's definitely part of what we do. It's even something that we look at when we are helping sellers and they're trying to determine their sale price. Is to say, okay, that's fine, and I understand why you want that to be your selling price, because you believe that's what the company is worth, because that's the way the math works out, because that's what you need to fund your retirement, whatever the driver is. And the odds are high that somebody buying this is going to need to take out a loan. They're going to take out the maximum loan that they can. And if they do that, you're never going to get a bank to approve it.
Right.
So you can roll the dice and hope that you find somebody with a whole bunch of cash that either wants to put that cash down, or they just want to buy your company for cash, or you need to rethink your sales price.
So you're part of the acquisition, part of the buying. You're sort of, are you educating? Are you sort of, I suppose educating might be the wrong word, but you're trying to influence your client, what the right offer or the right deal package that you're trying to do to be able to buy that company?
I think education is the right word. There's a lot of, in the SMB space, a lot of what happens is somebody decides they want to sell their company, and they've gotten a cold call from an investment banking company or from a business broker, and they're assured that they can sell their company for what they want to get out of it. And I have a whole list of people who have expressed interest in buying a company, right? So they feel like it's a fairly easy solution. Yeah. And a lot of the people in that industry are interested in getting the most listings that they can, because they know that not all of them are going to close. And so you've got a fair number of unsophisticated sellers. And when I say unsophisticated, I don't mean business unsophisticated. I mean, they've probably never bought or sold a company before. So they just don't really understand how the process works. And there's a tendency to think that selling a company is like selling a house or selling their product. And it's a completely different process. And so there's a fair amount of education that goes on just about, here's how the process works, here's what you should expect, and it's going to wear you out.
And so from a seller's point of view, have you advised to sell at a lower price because you think the company, after being acquired, would be more sustainable? So I'd imagine you could say you might get top dollar, you might get top price, but actually they're servicing a huge loan to be able to buy your company. If you reduced your price, you have, because if these are founders, if these are people or family run businesses, they want their company to last. They don't just want it to default and fail. So have you ever given them advice to perhaps lower the selling price to make it a sustainable business?
Yes, and it's really about, and we have, and it's the balance of the financing element that I talked about, and then also making sure that there's still, kind of that reserve element, right? When you get to the bottom, you don't want it to be zero. You want there to be some excess cash for variability. Because for everything that we can see and that we can estimate, there's stuff that you just don't know. You know, it's like, it's sort of like when it's for any business owner that has ever sat down and for any person who has ever sat down and done a budget at the beginning of the year, and it looks fantastic on paper.
Yeah.
Right?
It's Excel can look magnificent. The numbers.
It looks fantastic. I've looked at all of the things that I've thought about, right? And it never works out the way that you have it on paper, whether that's timing, whether it was slightly, you didn't sell as much as you thought, it cost more than you thought it was going to, whatever those different variables are. And, so you want to make sure that you put some cushion in there.
Yeah.
Just so you don't, the last thing that any new business owner needs is to get 3 months into having their new company and figure out that they're out of cash.
Yeah. So I can sort of, I can understand that. So at the moment I'm investing some of my money into properties. And I've serviced a loan to be able to purchase new properties. And I did a podcast not that long ago, maybe a week or so, maybe 2 weeks ago, which was things take longer than you think they're going to do, and they're going to cost you more than you think they're going to do. And so I can totally understand that, because these properties, they looked total settled. I'd done the research. I'd done everything that I thought was right. I got the right people in place, very much like an acquisition in a business. And then there was just this curveball that you just couldn't have imagined: slowness of the local authority, or the sellers stalling because of X and Y. And so, I can totally appreciate that. But it's very difficult. I sort of was, I suppose, a little bit prepared for that. Some of these guys that I'm assuming that, as you say, have never sold a business before, they don't see that as part of the package. They just see what are people going to buy that company for, and what am I going to draw out of that, and sort of timelines. I'd imagine timelines are a nightmare for those sorts of things as well.
Yeah, and one of the challenges that we face with some of the sellers is it's an emotional thing, but it's the math part of it is that there's a belief that they should get credit for their sweat equity, even if that's not showing in the results of the company.
Yeah.
And I completely understand that, and sweat equity doesn't pay the bills. So there's also that challenge, and working through the emotional elements of it, and really being neutral in the conversation. I can understand what their perspective is, and there are some sellers who have flat out said, now this is not the way it ended up, but have flat out said, if I can't sell my company for X, I'll just close it.
Really?
And that is such a, I'm like, okay, I'm not sure in what world, like, let's say they said, if I can't sell my company for $2 million, I'm not going to sell it. I'll just close it. I don't understand why you would choose 0 over like 1.5 million.
Yeah.
But it becomes this emotional thing, this belief that they have around how much their company is worth, and that they would just walk away.
Yeah, it makes absolutely no sense to me, because I approach my business in a pragmatic way. Whether these guys are, I assume most of them are men. That's quite a huge generalization, but it sounds like a male trait rather than a male trait, if I'm honest. But a lot of these guys, they want to be able to tell their mates, I sold it for 2 million.
Well, I'm certain, yes, there's all sorts of ego elements to it.
Yeah.
That's definitely true.
Right, so let's come back a little bit back to you. So I'm going to jump around a little bit. So you then did an MBA. Why did you think an MBA would add to your career?
So there's a couple of things. The first thing was when I graduated with my undergrad, I said I was going to.
Okay.
And I knew I wasn't going to do it immediately because I also knew that my very first thing that I did after I got out of college, and it was a requirement. I mean, I was in public accounting. I needed to pass the CPA exam. So I was more interested in studying for that and being focused on that. But I chose the MBA path, and I got my MBA about 5 years after, well, I started my MBA 5 years after I got my undergrad degree. So I was in industry at the point that I went back and got my MBA. For me, I chose it because I already had public accounting experience. I had a certified public accountant designation. All of my experience, even in corporate, was going to be in the accounting space. And I wanted to have more of a rounded out education. So I went back and got my MBA through an executive program. And nights and weekends sort of thing after I was already in industry. Yeah. By doing that, not only did I think I rounded out my existing education and professional experience, it also changed what I focused on, because I knew what gaps I had in my education and experience to date. So I think I made a different set of decisions around what was inside of my master's degree as a result of doing it later.
Yeah, I've not done an MBA, but I've got friends who have, and a lot of them that have made the most of it are actually people that actually have experience as well as education, and they've said that people that they've met on their courses and things said that people with maybe 5-10 years worth of experience that go back and do an MBA get more out of it. Mm-hmm. Probably because when you're 21, 22 and you try and do an MBA, you've got no experience, you've got nothing to sort of compare it to. And I think that's one of the problems with education, definitely in the UK, maybe in the US, that the education system is there to build you to be able to pass a test. Mm-hmm. And it's not always relevant to an industry or a vocation or a job or a career. So do you think that helped you doing your MBA 5 years after?
It did. And, the people that were in the program with me had experience. There wasn't really, kids, right? There weren't really the younger 20s, there was very few people. In fact, I don't know if I can remember any of them that had rolled straight out of their undergrad into the MBA program that I was in. Right. And my classes included people that had 20 years of experience. It included a gentleman that had just bought a business that was a really well-run business. And I think that added a lot to the discussions that you had in class. Yeah. It really changed everything from being highly theoretical to actually, you could apply that. Yeah. And I think it made a huge difference.
What was the most relevant part of your MBA, do you think? What area sort of inspired you for future growth and future development?
The program that I was in did a really good job of balancing the instructors between people who were college instructors and people who had gone out and done the thing. And so that made a huge difference. I think, it was still another 10 years, is that right? Yeah, 10 years between when I finished my MBA and when I left my corporate job. But there was a lot of inspiration that came through that in terms of what you could do inside a company as well as on your own. So for me, I think that the program, there was two things about the program. One was it was smaller. It was a smaller university here in Kansas City.
Yeah.
So the class size was smaller. I think that made a big difference. We weren't in these giant auditorium classes.
Mm.
And so there was truly a lot more discussion within the class and with the instructor. And then the second thing was that it was a good balance between what I'll call that real world information as combined with the academics. The last semester of my program was a 9-hour seminar, and we went all day every Saturday.
Wow.
And so it was really in-depth and focused and hands-on, and a lot of different elements like that. And I think that makes a big difference. I actually had started my master's at a larger university that had the auditorium classes. And I just really, it was very much a, here, learn statistics, pass the statistics test.
Yeah.
So
let's just jump to, so you said you left your corporate job 10 years after your MBA. So why did you leave the corporate job to set up your own business?
There was a couple of things. Professionally, I had really reached as far as I think I wanted to go in corporate. If I was going to stay in corporate, I would have stayed at the company that I was at. And I didn't see a lot of development opportunities there. I had reached the end of a 5-year project.
Yeah.
And as a result of working on that 5-year project, had delegated a lot of my ongoing responsibilities to the people that reported to me, and I didn't want that stuff back. And 2, I didn't really think it was fair from their career path to kind of take that step back. And so it was a very natural conclusion from that perspective. I certainly could have stayed, could have done whatever I wanted to. It just felt like the timing on the professional side was good. And then there were some personal things too. At the time that I left corporate, my husband had just taken a global position, so he was going to be traveling a lot. My children were reaching a middle school age where they weren't going to have the same sort of daycare framework that they had before. So there's just a lot more home management stuff that needed to happen. And it kind of all came together at the same time.
What was it like handing in your notice? Was it a relief or was it a relief or was it
so funny?
Yeah, go on.
So funny. Well, I tried to get a package for like 3 years and I couldn't get a package. And what I mean by that is that we went through layoffs every year, and I tried to get severance, right? I couldn't get severance. I'm like, so it's so funny because I gave my notice like in December, and we finally get to March because I had a hard stop. We were relocating for 2 months of the summer. Right. I was going to physically be gone, and we get to March, and I'm like, I told my boss, I'm like, dude, we're going to have to tell people. Like, we got to start working on the transition plan. I can't pop up 2 weeks before I leave and be like, whoop, I'm gone. And so he was like, but he was negotiating with me. I mean, seriously, up until I actually left, he was negotiating with me. He was like, okay, well, how about this? How about you just take 2 months off and then you can come back? I'm like, no, it's not where I'm at. I'm leaving.
Well, it's nice to be wanted, isn't it?
Yeah, I mean, it was, I had a great boss. I had a great team. There's a lot of things one of the things that I would say about leaving that environment was I really felt like I left on a high note. And that's good. I mean, if nothing else, like if I failed miserably, I could go back to work.
Yeah, absolutely. Absolutely. So your business talks about that you concentrate on, and maybe I'm misleading, but you concentrate on women-led businesses. I suppose what do you think that's something that the finance industry struggles with? Or did you just have a passion that you wanted more women leaders in the finance industry?
It's really both. I think I think a couple of things. Number one, I think you have a lot of women-led businesses that are reaching a cycle of maturity where they need more of that mergers and acquisitions strategy and understanding. It's not something that is really that commonplace. I mean, at the end of the day, the M&A industry is 90% male. And there's, a certain amount of fluency and comfort that I think comes from talking to somebody that you feel is more of a peer. So I felt like this was an underserved market. Certainly, I'm a woman business owner, and so I can also understand a lot of the things that they're trying to do when they're building their companies. So there's a rapport there as well.
Yeah.
And it, so it was really a combination of those two things. And it's one of the things that's really interesting is that I would say accounting and finance as a career, if you're out there in the world, whether you're in public accounting or in the corporate space, it's fairly well represented. I mean, in my personal experience, which is long ranging, it was, I mean, I don't know if it was always 50-50, but it was pretty well balanced.
Yeah.
Which makes it more interesting that the M&A side of things is not. And I think that can be intimidating.
So I agree. I think my experience of corporate world is that, especially up to a sort of senior manager level, is definitely very well represented. Again, you wouldn't want to say 50-50, but it's well represented with women careerists. I would say the further you go up to director and partner, it sometimes is a little bit more difficult for women because of childcare duties and ambition. Maybe not. They don't want that. They don't want that, which is a totally understandable. But so I would say that I think corporate world is quite well represented with females in finance industry. I would say we're still like entrepreneurs, business owners, still is probably, and I'll look for you to give me guidance on this, is probably not as well represented. Entrepreneurship is, in my view, still seen as a male-dominated area. And as you said about the company that wouldn't want to sell under 2 million, that sort of ego is still quite prevalent in the entrepreneurial mindset of people who want to own businesses and want to sell and want to do this and do that. So so do you think that's fair in the market that you look at?
It is. And I think there's also one of the things that we've historically seen is that, and I don't know who really is I don't know where this representation has come from. A lot of men will either start or buy businesses from very much of that entrepreneurial mindset and from the perspective of, I'm going to grow this. And right, this is a company, this is a business, and there's a certain approach that comes with that belief system. Historically, what I've seen on the female side and is more of I've started a side gig, I have this hobby business. They don't seek funding, they don't grow as quickly. And look, there'll be all kinds of people who'll be like, yes, but what about Sarah Blakely and what about this? And I agree with that.
Yeah.
I mean, I definitely agree with that. But I think what you see on the female entrepreneur side is either really small companies that are basically a self-employment thing, or somebody who has knocked it out of the park. And you don't see a lot of SMBs that are female-led. And, that I think you do see that changing. But, one of the things that I'm trying to work towards is providing that foundation for the women who want to do that. And having them not be as intimidated by the financial aspects of doing that. I mean, for my female founders and women business owners, you know, one of the things that I say is, I don't know that you're going to want to sell your company or when you're going to want to sell your company. But one of your goals should be to create a foundation that gives you multiple exit options.
Right.
You know, because 5 years from now, maybe you want to do something different, whatever that may be. You know, so how do you creating the way to make sure you have options is what we're focused on.
So sounds very sensible, and I think a lot more companies in this space should be thinking about the exit strategy. Might be something they want to look at further down the line. It might not be today, but further down the line. So I think that's a really, really sound value that you add. So so in the finance industry that I've been involved in, there's been it's always been described as war stories. Now, obviously, I'm not expecting any names or anything like that, but if I was to ask you one, just give me one of your favorite war stories of the finance industry, i.e. something that happened which was very extreme or was very disruptive or was very, like, maybe even just outright wrong. Is there anything that you would like to share with me?
You know, there's so many things. I think that one of my favorite ones, because I think it was one of the more creative ones I worked on, and this goes back years and years and years. I was still in corporate at the time, and but it tells you what can be done, and you don't have to be inside a really big company to do this. But we decided we had a group of assets that were never run like a business, but could be run like a business if you could package them all up and sell them to somebody. And so we went into each detailed system of that company and pulled out the relative parts that belong to this business, made it into a business, and sold it. And it was just, you know, some of it was right place, right time. There was definitely an opportunity in the marketplace for that to happen, you know, but I think one of the things that points out, and it was something that came up on a conference call that I had just about a week and a half ago, where there's a company that's considering selling, and they have two very discrete parts of their company. So one of the questions that I asked on the call was, I said, have you thought about breaking it up? And their answer was, no, we hadn't thought about that, but we would consider it.
Okay.
And so I think that as a business owner, you know, each of those examples, one was 15 years ago and one was a week and a half ago, there's an opportunity to look at your company and say, I bought this, or I created this in sort of this holistic environment.
Yeah.
But what if it wasn't like that?
Okay.
You know, there's, you know, the argument a lot of times for companies, like let's say you have a product and a service, is that, well, they're very complementary and one enables me to do the other. And, you know, there's all of that sort of rationale. And that's probably all true. And there are companies that only sell products and companies that only offer service.
Yeah.
Right. So if you were going to make a different decision because you're forced to, or because you want to, or because, you know what, you don't want to be in the manufacturing space anymore, you just want to do service, and you've identified these 5 other ways that you can do service, we don't have to end everything, right? You can really just get creative and reposition yourself and maybe spin off the product side to somebody who has no desire to do service ever in their entire life.
Right. And I think that's very, very true. in my area of corporate, it's very much service driven, and it's very much producing analysis and producing software and etc. And they're different. When you deal with clients and you speak to different clients, there is a difference between the manufacturers and the service providers. And as you say, they can be in the same business and complement each other, but equally, if you're looking for a refresh button, for example, just you could throw ideas off the table, and it could be very much split your business, sell one, spin off the other. I think that's a great idea. Right, we're coming to the end of the interview. I've got 5 questions which I ask everybody that's on my interview. They are quick fire questions, but they don't need a quick fire answer. So
okay, good.
It doesn't have to be one word answers. Don't worry about that. So, what's the best decision that you've made?
If my entire of anything.
Career. Yeah, big career.
Of my career, really, I think it probably goes back to the. Well, I would say this. It was when I left public accounting. I had made, as we all do, a series of I've got to have X, Y, and Z, and I'm never going to work for whatever company. Yeah. And when I left public accounting, I went to work for a startup. It was a large startup. It was a well-capitalized startup, but it was a startup nonetheless. And there was a level of energy and education that I don't think you can get any other way.
Good. Next question is, what's the best advice you've been given?
I think the best advice is it's related to decisions, and not, once you make the decision, that decision has been made, and to not go back and question it. You can make a different decision in the future, but that doesn't, stop, once you make the decision, stick to the decision and move on.
That's good. Who's the person that's helped you most in your career?
Probably my husband, because he's a very good sounding board. Right. He also works for a large corporate entity, and really, but he's not in finance and accounting. He's in sales. Right. And that, I think, having that different perspective has been, huge.
Have you had any regrets?
I'm sure, yes. And I think some of it's just necessary. Some of it, most of it comes from how I started my business and some of the missteps that I had in the early years. And other than maybe I could have gotten through it a little bit faster, I don't think I wouldn't have had to go through it.
Yeah, that's fair enough. I often get with the regrets question, you either get sort of 2 answers. No, because I am who I am and this is where I am, and it's like,
right, if I changed anything I wouldn't be here, right?
Exactly. And I think that's that. I actually do think that when I ask that question, but you also get the reflective. You are more on the reflective side on, well, I could have done it faster, I could have done it better, I could have, but equally you wouldn't be where you are now without those. I'm not saying the missteps, but without those steps which got you to where you are. So it's a bit of an unfair question, to be honest, because it's kind of asking you to be reflective where anyway. And the last question is, what are you most proud of?
Ooh, what am I most proud of?
Doesn't have to be career if you don't want to.
Doesn't have to be career. I mean, I would say I'm very proud of my family and my children. And, related to that is the fact that I've always worked. My husband has a global job. My kids, one's a high school senior, one's in her 2nd year of university. And we're all living together again. And we haven't killed each other yet, so that's good.
That's a win.
So, but I think, you know, related to some of the decisions that we've made that were right for us, we have raised some very independent children. And I think the children are actually seeing the benefits of that now, as opposed to the fact that they thought we were demanding. But, you know, and the other thing is I've been in business for 10 years and I'm really proud of that. And I employ people and we provide very good service to the clients that we work with. And I on balance, I'm happy about it all.
Excellent. Well, thank you for Jennifer for your time. I really appreciate it. It's been a really fascinating, in-depth discussion about the finance industry, and I'm glad we've had that. I think there's a lot of people, a lot of my listeners, which aren't in finance, and so it should give a really interesting perspective for them. So thank you very much for your time, and I'll speak to you soon.
Thank you.